The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone. Get my screen up. Let's have a great week. Last full trading week of the year. Next two will be broken up with Christmas and New Year's. Lots of Fed activity, central bank activity. The Fed Wednesday, BOJ this week. Start off with Euro USD. What a bust this triangle formation was. Normally, I look for the first breakout to be a fake out, but even the second breakout has been negated. So, I mean, this triangle was, didn't work if you tried to buy breakouts. I actually did recommend to try and sell back against a breakout at 25, but now we're back in this line, getting a little, little tail here. So for me, this is a very tough call. I will say, though, that Friday, this candle accomplished in the dollar what I thought needed to happen was to clear out the stops from back here, where the high was 69, and we just did it by 2 pips. And, everyone who had their stop over this high is saying, wow, I guess my stop was too tight. So never put your stop a pip or two above some type of swing high or low, because I've seen it multiple times. Forex Stop Hunter is my handle, and they do happen. They used to happen with open outcry. Now, I guess the algos replaced the guys that were in the pit, electing the public's buy and sell stops. So this wasn't a great close after cleaning the stops out, back at the line and now back inside the formation. Tough call for me here, too. Maybe people are trying to front run a Fed dovish hike like Blake talked about last week, where they're going to go ahead and hike, and then they're going to say they're going to be, data dependent, and they're seeing some signs of weakness, which would kind of be a cue to, that may be it for a while. As Blake said, one and done. But I'm going to be interested to see which way the market is going into the Fed. If the dollar's selling off into the Fed, it may be a fade. But also, if they try and bring it back and make a new high, either fail to or make one, 1, 2, 3 would take it to this number the team has been talking about a lot, 97.80. But right here, I don't know what to do. We've tried to establish direction, and now we're back inside the range. I do think that there's lower numbers, although I'm long-term very constructive in U.S. dollar yen. The candle on Friday, I think this high happened right around 78.6. I do respect how the yen held up with the equity debacle last week. So I'm thinking that we just get an ABC, and down in this range to this range, I'll be looking to reverse out of shorts or be looking to get long. And one thing I want to point out for, stock index bears is, I'd be very disappointed if I was long VIX products last week. So, all you really got was this. So, I mean, we're pressing the lows when we were, here and here, and the VIX has not made a new high yet. So it most likely will, but it's certainly has not led the action. To me, it tells me to be cautious, being short down here. I know we've broken a lot of support levels, but, we're not confirming on some short on the daily. If we make a new low, we're not confirming on the 4-hour. I know a lot of people are talking 25.54 or so. And, we're really not falling apart with the RSI structure here as of yet. I was looking for a little bit more downside. I'm starting to stalk cryptos, and I don't know. I may have missed the bottom. Bitcoin's having a great day. But actually, the one with the best, I believe, structure is Litecoin. See, it led. We had this candle in Litecoin while Bitcoin was still going sideways. Ethereum looking okay too, taking out a previous high. Actually, the weakness on the rally has been Bitcoin. So we'll see. I'm certainly not going to chase it. And we'll see what happens if this low stands. I know now getting this kind of action on the daily Bitcoin, because the RSI was just holding here at 29.29, although we were diverging on shorter time frames. Never got to the wedge line here, down here. So now if it does so, I think it'd be very hard for Bitcoin, especially Litecoin, to confirm a new low on the RSI. Look at this reading, over 80. That's not correct yet. And, it took a lot of work for months. So FACE is a place that you learn markets retrace and not chase. So I'm not going to chase. And we'll see what happens going into the end of the year. If there's more pressure, even though you have a recovery this week in crypto, I'd say that a vast majority of people are underwater. They have, a week or so to take their losses. We'll see what happens. But it is building the case for a correction that's either started, or if there's one more flush, the RSI is not going to confirm new lows across the majors in crypto. Precious metals, maybe they have another wave. I mean, it's not a tremendous response today with a weaker dollar. So silver, I tell you, there's such a game. Look at this. Every Sunday night, you get these kind of candles. This was last Sunday night, and it did it again here, and it did it again here. So it's almost like all the bids disappear, and the first trade or two is sharply lower. It's bought up, and you get these ghost candles all over the place, even at the lows. So we'll see about metals as well into the Fed, how they hold up into the Fed. And again, higher, maybe people front running a dovish statement by the Fed on Wednesday. My strongest recommendation of the week is to take the trial and immerse yourself in our work so that you could have a better 2019. I don't see how it could hurt you. And also, this time of the year, it's pretty important to think about, are you really happy where you're trading? Could you do better commission-wise? Are you getting rebates? Okay. All right. If you're in Europe, are you paying a cash out of pocket for your ForexAnalytix annual subscription? Or, you could have it paid for depending upon your trading volume, or maybe get checks. But I'd get hold of Trent and Justin and talk to them about your situation. Maybe just see, to say hello, and maybe you have a question for these guys. They're very customer service oriented. They're efficient. You'd reach out to them. You're not going to get phone prompts. You're going to get them. So it's a good time to be doing this and, prep for 2019. And we'll see what we can accomplish between here and the Powell presser. I think a lower yen into the presser, U.S. dollar yen, is the way I'm most likely going to sit. And I don't know, the guys were talking about it. There's not that much to really say in FX. It's kind of been the same thing. But I actually think this time of the year, you really can't trust anything, like technical breakouts. I showed you the triangle. But last week, I think it was significant that we made a new high and there was no follow through in the Dixie. So we'll see if it can generate one more high. Grega gave you a great line in the sand for the Dixie, to where you have to go with the bear case is beginning to show its hand. And that's right here. So here's your line in the sand for being for the bull case for dollar back under 640, you're probably looking at 94 handles. So I wish everyone a lot of luck. My guest today is Nick Chahine, and he does credit spreads. So different way to take advantage of option markets by not buying calls and puts, but setting up where you take in the premium. Of course, there's risks with everything, and you probably have to know what to do if it breaks through one of your collars, how to handle that. But I know a lot of people very successful just being the house in the option market. So we'll hear from Nick today how to do it. Stick around for that at the top of the hour. GM Blake, how's your body?
Good morning, Coach. How you doing?
Hey, good, man.
Hey, I'm doing all right. I took a break from the ruckus over the weekend and went to Christmas light looking last night with the kids.
Oh,
the son,
yeah.
you know how that is. It's like we hit all the pockets and went to the places that were most important for us every season. And it's interesting. Have you ever? I never saw the show. There's a show. It's like it's like a big contest where the winner wins $50,000.
Oh yeah,
one of those
best display.
Yeah. So one of the homes that won last year is a home that we go to every year, and it's amazing. It's
where's the Pinnacle Peak up in the?
No. It's this older home, and this family has been doing it ever since we've moved back from Texas, and we've been going every year. And they have an amazing home, and I'll tell you, they go from Halloween to Christmas, and it's Winter Wonderland, and it's amazing. I mean, it's absolutely amazing. Yeah. And it's not, it's just a young family putting it together, and they won $50,000, and nice. But they do great work. I mean, my kids will remember it, their whole life. So it's awesome.
Yeah, so, when I was a kid, they had something on Michigan Avenue in all the retail stores when there used to be retail stores, and they would their window displays were amazing. What they would do in the store, we would do that every year.
We did that in New York last year, and we'll probably see it again this year. And those stores, they do them up pretty good still. Yeah. I'm sure they do in Chicago still.
Oh yeah.
Yeah. So anyway, and by the way, I've reset my computer, so you're gonna have to bear with me a little bit as I try to figure out which monitor is the correct monitor for you guys to see. Give me a second.
You can take advantage of this time to tell the dog story, because
no,
that was so funny. Sorry, I know it wasn't funny going through it, but
it's only funny if it didn't happen to you.
Yeah.
All right. Don't worry. I'm not following, so.
Yeah.
I'm not following. Anyway, I reset up my computer over the weekend, and so my screens are all, when you're dealing with multiple screens, kind of moving everything around and making sure your systems. Anyway, it's a little different than I normally have it, which now I show messages on the screen as I'm conducting the webinar, which I can change, but for right now, it is what it is until I can get situated. So, when I got up this morning, and by the way, is my sound okay?
Yeah, clear.
Okay, good. Good. So when I got up this morning, and I saw the euro bouncing, I was really quite surprised. I was really surprised that we did this false breakdown. I mean, personally, what I was hoping for is that we were going to get a push down to 112, and I really wanted to be long ahead of the FOMC. I do think that the Fed's going to show some hesitation. I think that the risk of that is good, meaning that you got a Fed that's being pressured by the Trump administration, and even though that they're supposed to be independent, I think the risk is that they might give us a little bit more dovish slants, and therefore the dollar could be weaker going into Wednesday. But what I was hoping for is we'd see a breakdown to 112 so I could get long. Unfortunately, when I got up this morning and I see here we are at 1340, I was like, oh, man, this is not what I wanted to see happen, because I'm not going to be a buyer here. I can't be a buyer in the euro dollar right now ahead of the FOMC. So I would be in a better placement, so if we were down, if we had broken down like I thought we were going to, and be long over here. Whoops, that's not what I wanted to do. I can draw it like that. Be long down here. That's kind of what I wanted to do. I mean, that was my plan, and it looks like my plan's been foiled. Now, does that mean that I won't get long the euro? No, but I'm not going to do it ahead of Wednesday if we're trading here. We have to trade down to 112 for me to do that, because I'm always looking for the best risk reward setup, and I think that would have been it. Now, again, what do we do now? It's questionable. It's questionable what we can do here. And I'm short some dollar yen. I shorted it on Friday at 113.60. So I've got a little dollar yen and just trying to play this triangle. We might get a move down to like this, 112.50, and then, I'll figure it out once we get down there. And I'm shorting some New Zealand Canadian, still short that. That actually fell apart on Friday. That was a really nice, just kind of breakdown. If you guys were listening here, you on Friday, you knew that I was short this, and still looking for another move lower. I'm just waiting for this relative strength. Had to work off some of the oversold and get back to mid-range that's where we're at. But I'm not
great call. That was a great call, Blake.
Thank you. And this is one of those really big moves that you look at it and you go, okay, that was a squeeze. And we knew that the New Zealand dollar was squeezed in there. And so now we're rolling over a little bit. I'm just, looking for a continuation, but I've already actually added back a lot of the stuff that I covered on Friday. So I covered up a lot of my shorts down here at 90.80. I think 90.82 is where I covered some up, and then I got short some more on Friday at 91.10. So 09 actually, and I have an order to enter to sell more at 20, and it missed my order by just a few pips. So which is it's okay. I still think that the New Zealand Canadian is going lower, but it is. We're going into this week with the dollar pretty much mid range. It's not really clear, and I think the clarity is going to come on Wednesday. Unfortunately, I'm going to be traveling on Wednesday, so I'm not going to be in front of my computer, as I'll be going to the back east for our holiday party. So I'm gonna miss the FOMC, unfortunately. But I do think that if you guys are looking for some, volatility, that's when you're going to get it. You're going to get it on Wednesday. And by the way, I will be here Wednesday at this time to conduct the webinar before I go out of town. So I should be here. Aussie, really quiet. I mean, this consolidation is extremely frustrating. Nothing going on there. The Kiwi, this has broken that up channel, and now we're just kind of consolidating. And I think you can look at it like this. As long as we stay below that sell zone, if you will, this should be the new resistance zone. So any move up to like 68.25, you're going to probably find some opportunity to sell. I think in the Kiwi, we might be flagging here. I hope we are, because that's going to help the New Zealand Canadian that I'm short. So I think we might have like a little flag here developing. And equities, well, I'll talk about that here in a second. And here's the dollar CAD. The dollar CAD is just kind of sideways. Nice little consolidation here. Probably do something like that. We might break higher here soon, especially with the stock market looking a little weak. So let's talk about the S&P. So here we are at the S&P, you know, we're trading at 2,600. And I'll tell you, this market looks very vulnerable. And I know I mentioned it over the week ahead video, but it looks extremely vulnerable. And, you know, if the Fed signals that that this interest rate hike cycle is coming to a close sooner rather than later, you know, that could boost the S&P. The S&P could rally off of that if everybody thinks, okay, the Fed's done. But if the Fed says, hey, you know, we're going to continue to raise rates, you know, I don't care what the Trump administration says, or it doesn't have any bearing on them, we could actually see, you know, lower levels and start breaking down. And remember, this is the season where traders are really buying equities, expecting a Santa Claus rally, and you know the market has done nothing but fall on its face. So, and we are just so you guys can see it here. Let me reset this chart. You know, we're below a pretty key trend line in the S&P. You know, we closed below it. We're we're looking like we can challenge a lot of this support here. So you start looking at all the support through with the S&P. You know, I guess we can probably draw it something like that. I mean, we are at risk of breaking down, and you know, I think if you're long stocks right now, you gotta pay attention to that. That's one of the reasons why I have this dollar yen short, is because, you know, I think that the risk of equities continuing lower is kind of high right now, and if that happens, you know, the yen may come back into demand. You got the euro yen that's sitting right on support here. Pound yen is, you know, there's a lot of support down here, down at 140, but you know, the pound yen is, well, it's really more reflective of the pound. You know, the Aussie yen, nice little failed breakout into some resistance. New Zealand yen, you know, we're also the squeeze looks a little over here. The Canadian yen, we bounced. I actually pulled the Canadian yen long off. You know, got long down here at 80, like sub 84, and took that off on Friday. Let me see. Close pattern play at 84.85. So, you know, up here. It looked like we're going to get some dark cloud cover, which that's a dark cloud cover setup. So that's yielding us some downside right now. So you can see the yen pairs actually look pretty vulnerable as well. So I think if the S&P you know, starts to see some downside, then, you know, we might get some downside in those pairs. You know, following the general equity markets. One of the things that's kind of surprised me is that gold has not responded, and gold actually failed up here. I was surprised that, you know, the gold market did not capitalize on this move above this 1242. You know, Dale, I think everybody's watching the 200-day moving average in gold, and I think it's keeping a cap on it. So, you know, if we can really take that out, you know, above, just say right here, you know, above this resistance, I think that's going to be pretty bullish on gold. But I'm surprised it didn't make a run for it actually earlier this week, or earlier last week.
Yeah, it's a tough call from here because it met minimum expectations and broke out, and then it's underneath it. I guess the whole key is going to be what happens with the dollar. If that's a top, I think that gold could make a move towards your 1.618 level up there, 1272. If we get above it, and the dollar really is going to correct to the downside, I'm kind of thinking the play now would be if when the Fed hikes, if the dollar rallies, it's probably a fade into that to see, you know, what kind of pop. If the Fed can't generate another high over last week with the interest rate hike, could be a good fade. Just a guess.
Yeah, you know, and I'm not really. I really hope that the dollar maintains its strength going into Wednesday. I really do. And not necessarily against the yen. I'm talking about against these European currencies.
Yeah.
I really like to see that euro, drop towards 112. But, this false breakdown, kind of freaked me out. When I got up this morning and I saw that, I'm just like, man, what do we do with it now? Kind of foiled my plans, if you will. So,
nothing's okay. Is when it's cloudy and foggy and you don't know, one thing that usually gives me comfort is eventually I will know. So I don't know today, but I might know by Wednesday what to do with it.
Yeah.
You know what I mean?
Yeah, exactly. And but this is the type of day where, I put my hands in my pocket and I'm just not doing anything. There's nothing that's prime for me, and there's nothing wrong with that. Being patient and waiting. It kind of stinks because you sit in front of the computer for 15 hours at a time, and you're like, man, I just want to do something. But we do get paid to wait, and for that great opportunity, and hopefully, we'll see some opportunities show themselves, and maybe Steve and Stelios have some better ideas, and I know that they're going to look at all the crosses and see if there's anything going on there. But maybe those guys have some better ideas. Steve, good morning. Let's see if he's around.
Hello, I'm here.
Oh, Stelios is here. Good morning, Stelios.
Good morning. Actually, before we start, I wanted to say, Dale, those silver candles. I mean, they look. Why do they look weird? They look like legitimate sell orders in a very liquid time of the day where somebody has to unload a big position without caring about execution. I mean, everybody does that, don't they? I'm kidding. Sorry, I'm kidding.
This is the way to do it, right, Stelio?
Yeah, absolutely. Why not?
To get the best price.
Yeah. Actually, I was gonna say about. Actually, sorry, were you gonna say something, Dale?
No, go ahead, buddy.
I was going to say about the Fed and what's going to happen on Wednesday. I always look at Fed fund futures and what they're pricing for rate moves in the future, and we are currently pricing more or less a hike in December. I think that's done for Wednesday. But after that, we're pricing 20 basis points for the whole of the year. So that if you guys remember, the market, the Fed fund futures market always prices less than what the Fed is actually telling us it's going to do. And so far, not always, I mean, in this cycle, so far in the past 2 years, it has kind of been wrong. So it has had to adjust higher. So when they hiked, how many have they done this year? 4, right? With December, it's going to be 4.
Yes,
every quarter. Yes.
Yes.
Yeah. I don't remember. I don't think the market ever priced 4. I remember that it was pricing 3 and a little bit, but it was never pricing 4. And it's been like this for the last couple of years. So if you ask me, going into Wednesday with the market pricing less than 1 more for 2019, I would say probably that for the short term, the risk is for the market to be surprised on the hawkish side. So it might go and price in 2 completely and then maybe a little bit more. That's my thinking. I personally think that if equities continue as they are, and I don't see what's going to make equities bounce apart from the seasonality of December. I think if equities continue and the S&P goes towards 2,500 points, I think they're going to be done. They're going to do 1 more, maybe, and then they're done, because we know how sensitive they are to equity markets. They shouldn't really, but they are. So I think in the short term, I would be careful. I think the risk is probably for the market to price more hikes than it is now. But then in the medium term, 12 months from now, I think that the market will probably get it right. I think 1 more in 2019, and that will be it. So just my 2 cents on what's being priced.
I wouldn't disagree that this might happen in the short term, Stelio, but personally, I believe that we're going to celebrate next year's holidays. The end of year holidays, with rates being most likely at 0, if not negative. That's my 1 year ahead prediction.
That's punchy.
All right, guys.
Yep.
Hey, I'm gonna sign out. I just passed the charts over to you guys.
Yes, I got it. Thank you.
All right. Hey, thanks everybody.
Blake.
Thanks, Coach. Good luck today, guys.
Good hunting, Blake.
Bye-bye.
Let's see if we're going to find anything.
We actually have Empire State, just came in. Empire State manufacturing very weak. Expected 20.1, came in at 10.9.
Details, just half.
It's not an insignificant number. This number, it's it's relatively important. Yeah.
I know, I'm kidding.
It's just reinforcing Nostradamus' call for QE to start again. We'll be in full force QE. Could happen, Steve.
Kidding aside, my personal assumption, I give more than 70% chances that in a year from now we're going to be zero or even negative rates globally once again. Although I need to remind that the global economy is in such a dire condition that for example, the US has not left negative real rates since the previous financial crisis, right? Because if we take the assumption that the reported CPI is the correct one, which it isn't, but let's assume it is.
Big assumption, yeah.
Still, we have negative real rates, right? So Trump believes that this is the best economy ever, which can't even handle zero real rates, right? So I don't know what else to say about it. So yeah, I don't think we're going to have the year ahead is going to be an interesting one. As I've said many months ago, I think volatility is here to stay with us. I don't know for how long, but definitely until we break down completely. I don't know if that's going to be now or if it's going to be in a few months from now, but I really see the global economy running out of steam everywhere. And I do think that, unless we get, this whole mess unwinded, at least,
So was that the high in the dollar, Steve, on Friday, where they cleaned out the stops that have been that high that's held for a month or so, and no follow through?
It's too early to say.
Okay.
It's too early to say, especially with the FOMC ahead. I mean, I would still favor another push higher. I have to tell you.
Okay.
But it could have. Yeah, but I'm very afraid that we might have another 2 days of boring markets until we get the FOMC, because it's already been a horrible last a week, 10 days with markets doing almost nothing. And I'm afraid that given the fact that the FOMC is quite important, because it's not about hiking or not, because as Stelio said, I doubt it that they're going to surprise and not hike. If that happens, by the way, expect huge moves to take place, huge moves. So, for example, if they don't hike, which is, in my opinion, it is like a 5% probability. In my mind, the chance that they're not going to hike is not like 0.1. It's like 5%, let's say, right? So it is a chance that's out there, but, quite a small one. So if they don't hike for any reason, expect very big moves to come. Expect a very big move in the dollar. I expect that initially, and I want to stress that out, initially, we're going to have a very positive reaction from stocks, because I'm saying initially, and by initially, I don't mean that it's going to be for an hour. It might be just for an hour, but it might be for a few days, especially given, the more illiquid conditions that we're moving towards now that the holiday season is coming. So I do believe that we're going to see some positive reaction from stocks, but I do believe that once investors, perhaps after the holidays, consider what that means, I mean that the Fed has actually had to decrease quite substantially their expectations of, what is the neutral rate for the economy at the moment.
Means they're worried.
Exactly. They're going to start getting very, very much worried. So despite the high possibility that either if they don't hike, or if we assume that they hike and they give some very, very dovish language, that the market for some reason, let's say, even starts pricing out that almost 1 rate hike, it's pricing in for 2019. I do believe that will yield some positive results in risk, but I do believe that it's going to be short-lived, because the market then is going to start realizing that, okay, the Fed knows more than what they're telling. The Fed is never going to tell you that we see a recession coming simply because they know that this is going to be a self-fulfilling prophecy. Because if the Fed comes out and tells you, we're quite afraid that a recession is coming, everybody's going to start selling everything that's risk on, right? So, despite being unable to avoid it, it's going to come, sooner and with more force. So since you know that the Fed is never going to come out and say a recession is coming, the closest one they can come to doing that is telling you, okay, probably we're going to stay as it is and it's fine and it's going to be a wait and see. So, the investors are going to be translating the dovish language, and, some quite dovish language can be immediately interpreted like, okay, we see a recession as a very high probability of coming within the next few months, which means that I would be a seller of any risk on move after it runs its course. Now, running its course is something that we need to take day by day to, see when it's going to lose steam or whatever. But, this is an opportunity I will be looking for. Now, of course, this might never happen. I mean, we might see some negative reaction immediately, and that would not be a surprise because we're going to take the indices one by one. And let's begin by the S&P. The S&P has broken down below this triangle. And, just by projecting the possibility of another leg lower equal to the first leg down, which is like a minimum expectation, we get a target that's roughly where this horizontal support resistance zone is at 24.75, 24.80. So that's quite a probable target for the S&P. And, as long as we remain below 26.90, we have no reason to turn hawkish. At the same time, I remind you that on Friday, we finally got to see the Dow Jones close below, this equivalent triangle, which would also point lower. This is quite an interesting area of support, roughly at 23,360. The Nasdaq has been one of the weakest. It's still depreciating, within this channel after the first leg lower. Definitely the Russell has been even weaker, and we all know how many people got trapped thinking that the Russell would be overperforming due to the trade war, which I had told in advance that this is a stupid way to look at things, and it got proven because it's been hugely underperforming. We broke below this triangle, which shows that there is one more leg lower. I like this target, this confluence of supports. As you see, this area has acted as support resistance multiple times in the past. It's also the 127% extension of this last leg higher. So I like this 134 as a potential next target for Russell. At the same time, don't forget that the VIX seems to be consolidating within this triangle. We came in from the downside, which tells me that there is quite a high possibility that we are going to be seeing some resolution to the upside. So, to be honest, if I completely disregard the fact that we have the Fed, which I can't guess what they're going to say and what the initial reaction is going to be, just looking at the indices and looking at the VIX, I would not be surprised if we get more risk off in the following days/weeks. The DAX made an attempt to rebound, but it didn't even reach the broken triangle support to retest it as resistance and seems to be failing. The FTSE failed from this previous area of support, never managed to close above it. It probed twice above it intraday, but never managed to close above it on any of the days, which left behind these two long weeks on these candles, which is definitely a bearish sign. And the next area of support comes down at 6,630. The Nikkei is striving to hold this parallel of this trend line, but it looks very heavy. So I'm also expecting here a resolution to the downside. That's what we drew when we were up here, that another leg lower. So I would expect that there are very high chances that this is going to be resolved to the downside for at least one more leg lower towards 20,300. So no matter which index we look at, they all look at the moment quite bearish, and there is no other way to see it from a technical perspective. On the other hand, and now, Coach, I know that I'm going to surprise you. Are you here, Coach? He probably fainted. He probably fainted by what I have to say. I do see the probability that this is a nice buying opportunity for Bitcoin in the short term. I even wrote it in the end of week analysis that we are currently probing some major support area around 3,000, but this looks like a descending wedge, and we seem to be breaking above it. So I have to say that Bitcoin is attempting to make a move higher, which could lead to a bigger rebound. So I think that in the short term, Bitcoin, if it confirms at the end of the day, looks good. I also like Ethereum because it almost made it to my final target, which was this confluence of the 161.8% extension of this rebound higher and the previous support resistance area down at 75.50. Didn't make it actually there, but it made it roughly to 80, which was close enough given the fact that, this was my target since we were much, much higher. Like since 400, I was looking at this area as an interesting one. And, I'm very closely monitoring of this descending channel's resistance, which currently passes from 105, but every day it obviously, since it's a descending trend line, every day it moves even lower. So I think that we might get near the holidays like a buying signal for these those two cryptos at least. So Bitcoin and Ethereum, if they confirm a couple of days of strength, I think that from a technical perspective, they're going to be looking good for a rebound, which makes sense because nothing moves in a straight line, and we've had some huge moves to the downside. I mean, Ethereum, for example, just from May to December, it has lost. Just look at it. It was trading. May was trading at 800, and we ended up trading at 80, right? So it lost like 90% of its value in 6 months. 7 months, whatever it was, right? So yeah, at some point you expect some kind of a rebound. I mean, even if they end up going to zero, they're not going to end up going to zero, in a straight line. So I do think that we might see a period that they're going to be doing well. So if for some reason you have an account and you're trading them, I think that within the next few days we might have a nice confirmation that there's some trading opportunity for them to the upside, and we might see a squeeze. Anyhow, we've gotten used to like volatile moves, so it might be a nice, quick opportunity for a profit. Now, having to do with the rest of the markets, obviously the euro was looking like it was breaking below this trend line on Friday, but it's quite important that it managed to pare back its losses enough to hold at the daily and weekly closing basis the 113 level, which psychologically speaking is quite important. So we're seeing a rebound today, which means that we're back to zero. I mean, we still don't have a real resolution to this triangle because you can even redraw the support like this. Who knows? I mean, we might keep trading around it like until Wednesday, but I do think that maximum on Wednesday with the FOMC we are going to see a resolution, one way or another. So we should see some follow through after that. Same thing with the cable, but the cable is quite more easy to read. I mean, things are quite simple. We had a consolidation after a strong move lower. We broke below it. We came back. We retested this previous low. We haven't even made it up to retest these triangles, broken support as resistance. So as long as we're holding below 127, I really don't see from a technical perspective any bullish argument for the pair. So, it's as simple as that. As long as we trade below 127, cable is a short. Now, if we make it back above it, sure, the market can squeeze. But until that happens, there's not much to do. Now, having to do with crude is in danger of breaking down because instead of producing a bigger rebound higher, it seems to be consolidating and working out the oversold conditions in time instead of price. So the longer it takes for us to, push higher even once again, the higher the probability that we've already seen the high, and this is like a symmetrical triangle, which should produce one more push lower, perhaps towards 45, which is the 61.8 from the lows to the recent high before we finally see some bigger correction higher. So crude sooner or later is going to be resolved to the downside. Now, the only question that remains in my mind, is it going to happen from here, which, as I said, for every day that passes, it's more probable, or are we going to see another push higher and then, see one more push to the downside? We're soon going to find out, but time is working against the longs because, the more they fail to push higher, the higher the likelihood that they're just going to capitulate, close their positions, being frustrated, and the market is then going to dump once again lower. Nothing has changed now having to do with the vast majority of the metals. Copper still consolidating within this triangle. Perhaps the FOMC is going to be the catalyst to see the next move in this one. I would prefer if I saw the next move being to the downside. Platinum remains very weak. So, nothing new to add here. I mean, I don't find any reason why we wouldn't test again the 757 low. Palladium remains very, very well bid. The next area of resistance is up there at 1,330, which is the 161.8% extension of this long corrective move that we had from the beginning of 2018 until the mid of August. So, why not one more high before we see a deeper correction lower for the metal? Now, having to do with gold and silver, nothing to do here either. I mean, gold, silver still consolidating within a rectangle. If we do close on a daily closing basis above 1480, that then triggers quite a bullish formation, which targets, the almost a 61.8% at 1599. But unless that happens, as I was saying before, with in regards to crude, the chances are that if the bulls don't, manage to push above this key area soon, the metal is going to break down. Same thing with gold here. Gold pulled back, retested this previous high as support. So far, it's holding. So as long as this horizontal support resistance area is holding a support, there is still the chance that we're going to see one more push higher towards 1260. But in any case, I would expect that this corrective move, because it has all the characteristics of a corrective move, sooner or later is going to be over, and then we're going to see another move to the downside. Now let me see if we have any questions. Okay, a question about crude. Sorry, I hadn't seen it before, but it doesn't matter because I covered it anyhow. The channel in gold would give us a measured move to about 1040. Yeah, let's go on a weekly chart in gold if we want to speak longer term here. Okay, so this is the weekly chart of gold. So first of all, let's not forget that on a weekly, we had this major consolidation which broke the downside, and this looks like a bear flag, right? So if we take the extension of this from an assumed high, I'm guessing that roughly we should see a retest of this low, if not lower, because the market, you know very well that the market likes to inflict the maximum amount of pain to the maximum number of participants. So, why not push to a new low, even below the psychological 1000 area, get a lot of people becoming very, very bearish at the possible worst point in time, and then snap back and accelerate higher, right? So despite being very bullish gold in the long term, it's not that I'm blind or that I'm blinded by the fact that I have exposure having physical gold. I do believe that, there are very high chances that the next, short term to medium term move is going to be to the downside before we get the longer term uptrend reinstating itself. And then I expect that we're going to break the 2011 highs.
Steve, what do you think will be the catalyst for one more decline in gold? Is it going to be the dollar? I'm trying to figure out what the catalyst would be. The deflationary.
This is something that troubles me quite a lot, Dale, because my macro thesis does permit for an initial strengthening of the dollar, so that's not a conflict, because I do believe that the market being conditioned to believe that a recession is flight to safety, which is the yen, the US dollar, the Swiss franc, etc., etc. So an initial conditioned reaction like that, and an initial fear that a new recession is also going to be deflationary, could actually cause this move down in the dollar. But I do believe that the solution especially for the US and the dollar, is going to be a big depreciation of the currency. And the big depreciation of the currency can also bring, of course, price increases. So it's going to be, it's going to then be a vicious cycle, and that can also, give us a much higher gold. Of course.
Yeah, I got the higher. I'm trying to figure out what the catalyst is going to be for us to take out that 1160 low.
Probably, I would guess, an initial speculation of the market that
the Fed isn't done. Fed isn't done.
Not exactly. That the upcoming recession is going to be a copy of the previous one. But I believe it's not going to end up being like this. I believe that initially the market is going to fear that it's going to be a deflationary recession, but after some point it's going to turn out to be something much nastier than that. That's my personal thesis. But initially, we might see a strengthening dollar due to flight to safety. Now,
okay, that's it.
Yeah, I've said why I believe that the initial reaction, dollar is flight to safety, is going to be proven a very, very wrong reaction. But that doesn't mean that the market can't end up following it for a few months. You understand what I mean?
Sure. The market always can remain irrational longer than we can remain solvent.
Oh, yeah.
Right?
For sure. And it's proven that, over time, multiple in multiple occasions, right? There's no question about it.
Yeah.
That's what I see here with, and equivalently, if we want to go to the weekly chart in silver, just tell me, Dale, isn't this descending, this huge descending triangle in silver just, begging for another push lower, right?
Yeah. But maybe first we get the C wave, and we take out the A wave high, and it goes to 15-20 or so before the breakdown.
Might be, but still, if you look at the long-term picture, it looks like it wants to eventually break these lows, get everybody very, very, very bearish. And
a lot of stops under 1390 or 1380, close under 14, I think will create a panic. Yeah,
absolutely.
Maybe almost $1 out of it if they do it, but they may try and squeeze shorts that are looking at it like us right now first.
Don't forget that silver was trading at single digits October 2008, and look what happened to it afterwards, right?
Yeah,
it traded almost at 50. So imagine how much room it has to cover once it actually finds a tradable low. And I do believe that we're much, much closer to a low than the next high, the next cycle's high that's going to follow after that, right? Because don't forget, this is an actual physical commodity. It has usage, it has cost of extraction, it has a cost under which companies that extract it stop extracting, which by default creates a shortage. So it's not something that can go down to zero. It's not that suddenly after 5,000 years, the globe is going to be like silver. We don't need that. We don't have to use it ever again. I mean, let it be. Just, no demand. Demand goes down to zero. So you might not extract. We don't care. It's not going to be like that. You know how it is. That's why, if you remember, I was explaining the other day that the distributions of prices for commodities in general are skewed to the right side, right? Because usually, the vast majority of the time, the prices might be tilted more to the left. I mean, the peak might be more to the left than a normal distribution, but you get fat tails on the right-hand side. That happens when you have some kind of an event that you have, for example, supply shortages, or for some reason demand exploding for XYZ reason momentarily. And as you very well know, in these kind of businesses, supply cannot adjust to demand instantly. It's a process that needs time. I mean, to open new supply lines or to new mines, or it needs a time, right? And
a lot of time and money.
Exactly. Investments that might have been frozen due to low prices. For example, imagine how many investments happened when silver was appreciating in the way it was appreciating, and that's probably one of the reasons. The fact that we might have had too much investment, for example, in the extraction of the metal, that we might have had so much of a downside following that, because usually you get them functioning at the top of the market, right? But now imagine the following: how many years have passed since the last time a big company thought, oh, it's a good idea for me to to put some money in investing in opening new mines to extract silver or whatever? Probably many years.
Yeah, because we're under production costs right now for most of the miners.
Yeah, imagine what's going to happen
in silver.
Imagine what's going to happen if we go down to single digits for a short period of time, right?
Yeah, bankruptcies.
Yeah. Exactly, and then at some point, you get an event, you get a big increase in demand, and suddenly the market flies away, literally flies away.
So that's a good point, Steve, because a lot of people also trade miners. So we could have the silver turn, and the miners could still be in trouble. So you really have to do due diligence on the company. You have to look at their balance sheet. You're not going to want to buy gold or silver miners with a lot of debt.
Exactly, or the small ones that are exactly.
Yeah,
exactly.
So just a word to the wise: do your due diligence on mining companies before you buy them.
Exactly.
I ask other people because I'm too lazy. Please do my due diligence for me.
And send it
Hecla Mining, So anyway.
Let me give you my mail address and send it over.
Yeah. Thank you. You're part of my intelligence gathering.
So is your guest here, Dale?
Yeah, I see Nicolas in the house.
Perfect. So enjoy the interview, and let's hope that we're going to get some kind of volatility at least following Friday's FOMC, because the last 10 days have been
Wednesday.
Oh my, yeah. Sorry, what did I say? Yeah.
Hey, Steve, before I put Nick on with the people in the room, how many would be interested if FACE had live coverage of the Fed every month? Give me a why if you'd be interested. Come back and see how we're reacting to the Fed. Otherwise, as a member, you'll know how Blake and Steve and the whole team feel about trading activity and opportunities during the Fed. Right.
Updates, yeah.
Just an idea, though. But okay, buddy, great review. You know what? Never doubt yourself that you can't find something to talk about for 30 minutes, even when the market's
you're doing part of the job. I mean, you're helping.
But I mean, if there's one thing, I'd be worried about you if you couldn't talk for half an hour. All right, that's what
by the way, let me remind people something else. Started today, already happened, because we wanted to give more coverage, yes, to European clients. So we started today. Polly's European crossover webinar is at 9 a.m. GMT, or in Eastern time terms, That's 4 in the morning Eastern time.
So that means Paulie's getting up at 2, I believe, to do this. So, I mean, Paulie's the newest member to FACE, part of the team. But he's a veteran. I mean, Blake knew him from Wise Trade. And,
absolutely.
That's a sacrifice because, I have a hard time at 4 in the morning. So
Absolutely.
Paulie, and it was Paulie's idea. Let me get up earlier so I could have less sleep, so that we could serve our European clients better. And great spirit.
Let me also add to that the people that had gotten used to watching his show at 11 GMT or equivalently 6 a.m. Eastern time, they will still have the ability to do so, because by that time we have the link to his webinar available only to our subscribers, because then we release it for the rest at night. So by that time we will be sending, as we did today, the link to the recording through bell notifications. People that are subscribers to ForexAnalytix know exactly what that means. And of course, we're also posting it in the chat room. So if you had gotten used to and you can't watch it earlier, you can still watch the recording, the first recording, at exactly the time that the webinar was starting up until the previous week. Okay. So thank you very much, Dale, and enjoy the interview.
You're very welcome. I tip my hat to Paul Franco for volunteering to become nocturnal and an owl for our traders. So I see you in the house, Nick, and I'm really looking forward to meeting you and talking to you. Now making you the presenter so you could share your screen and we could hear your voice. Welcome to FACE. There you go.
All right.
Hi, Nick.
Hi, how are you?
Good. Very nice to meet you, buddy. I appreciate you taking the time to address our community with something I haven't really brought to the table for people to think about as a way to go. So I know that your forte is credit spreads, which is the opposite of buying premium.
Yep.
You're the house. So I'd like to know what you were doing that led you into being an option writer, maybe your first foray into the business. Were you buying them first before you discovered that you should be writing them?
Yeah, absolutely. That was a long time ago. And I had a friend of mine who calls me up one time. I got to run to the bank. He had a margin call of sorts. And he had delved into options and he didn't really understand what he was doing. And at the time, I asked him what it was that all about, and he couldn't understand it. He couldn't explain it. So I started asking myself questions and started buying a little bit here and there. And then, you read every book or everybody that wants to educate anybody about options. The first thing they say usually is that most option expires worthless.
I even was more jaded than that. I used to say options are like relationships. 90% of them expire worthless.
Yeah. So the percentage is pretty high.
I don't believe it anymore, but right. The relationship part.
Oh, okay. Good.
The option part I do, but yeah, go ahead, buddy.
Right. So the better question is why buy them and not sell them. So then you ask yourself, okay, how do I sell? What do I sell? Where do I sell? And those are really the important questions. And it's a simple, repetitive thing, but you have to be diligent with what you do and stick to what you know and what you don't know. And on that statistic, though, I don't know if they take into account the fact that a lot of the strategies are spreads, which by definition they're designed to one to lose, one to win. Right. So statistics can be led this way or that way, but they tell the truth overall that it's probably better to sell them than to buy them. There is a place where you need to buy them, but if you're trying to generate income, probably the better way to do it is to sell it if you know what you're doing.
Yeah, and is it better? I'm guessing more potential on the trade the higher the volatility level is.
You know what? I like boring. So okay. I would rather low volatility, predictable without any headline, because when you sell something, you want nothing to happen. In essence, right. That's how you make your money. Okay. Because if nothing happens, then whatever you sold, the lottery ticket you sold to somebody is going to lose for them, win for you. So yes, it's enticing to sell into high volatility environment, but by definition, you should be expecting a lot more problems or potential problems.
Managing the risk on the side that's being taken out by the volatility, right?
Right. And these days we have three egos that are kind of in charge of the world, and it's hard to guess what they're going to say and do, and it just makes homework a little less important. And more of guesswork on the short term, which is a shame, because a lot of people do a lot of good work, and then boom, headline comes out middle of the day or something.
Yeah, you know, it's kind of, I've seen it before. A guy, I even remember in '87, a guy that was, you know, selling bond options. And it was like picking up, you know, quarters off the sidewalk. And then you have a crash and the bonds explode and gave it all back and then some. So risk management has to be an important key. Did you have any people that were your guides or mentors or influenced you that you learned from coming into this, or are you self-taught, Nick?
I am self-taught. I'm an engineer by schooling. I'm an electrical engineer. And then I did delve into the business world, and especially in finance. And then from that, I got lucky with a couple of startups. And then all along I was trading, and I decided that, you know what, I just don't want to do anything else. So I didn't have anyone in particular that actually taught me anything. I did learn from a lot of mistakes. I got lucky when I first got started selling spreads. I only had 2 or 3 tickers I was trading at the time, and there weren't a lot. And now there's many more expiring 2-3 times a week, which makes it easier to manage some positions, say in the SPY, for example. But you have to do the homework, establish some sort of a way of doing it, and sticking to it and adjusting if there's if something wrong, if you find something wrong in the way
you leg in. Do you leg in, or you put the whole spread on as on one?
I don't like to play around with legging. I do sometimes. If I catch a swing, if something is running and I can see on the chart that it's going to run a little more, and I'm trying to trade fast and I buy something, then I'll hold it until before I spread it. Sometimes you get lucky into doing that, and then you're into a position a lot cheaper, or even free, or even get paid to be in a debit spread of sorts. But that's not my go-to way of doing things. The way I think best works is everybody's chasing where price is going. It's easier to find where it's not going, which is everywhere else, and sell risk out there. So if you want to put a analogy there, it's kind of like selling insurance to somebody who drives in the desert with no cars around, rather than sells insurance to somebody who's driving downtown somewhere in a busy city.
Interesting. Nice metaphor. Okay, so we're looking at S&Ps now.
Yep.
It's been in a range. So, we don't know if it's going to take out the range, take out the Jan lows. How are you looking at it now? And why don't you explain perhaps a position that would develop a credit for people with what's happening now in the S&Ps?
So the macro is still okay. The problem is that the headlines that are short term, that are shaking the sentiment. I think this is more of a crisis of sentiment. Yeah, and there are some signs of weakening here and there, but it's all normal. I mean, we can't just go to the moon and everything, but there are some definite value out there, but so far it's been value traps. So recently you hear all the experts in the media saying, I'd like to revisit the February lows. Well, that's all fine and dandy. First, because that's how they programmed to do it. I'd like to revisit this and revisit that. But I think this time around, if we do revisit the lows, we may open up another trap door down to the 2440s and then 2320s. So in the S&P. So I don't think they want to see
everything's waiting on the Fed here.
Yeah, this week we will get some body language from them. It's probably going to be dovish. How we react to that, who knows? Even though my conviction is that we still have room to go higher, but I'm more convinced that the reaction is still a coin flip from here. So I'm not deploying any brand new risk from here. I'm just simply managing what's out there. So catching falling knives here is okay. I'll give you an example. Let's say if you're looking at Apple from a trading perspective, all right, everybody loved it at 220, 230, and now here it is, but a lot lower than this, and into some support. Technically speaking, this is a daily chart on Apple, and everybody is like worried about where it's going to go below. So if you love Apple and you want to buy Apple here, you can use puts, selling puts into it to actually say, okay, I would go long Apple if it goes below 150, for example. And it's very easy to do that. If you sell a put at 150, you're simply committing to buying it at 150. So it's way better than buying it here because you have a.
How much premium would you take in, and how far out would you go in the term structure?
It all depends on where and how long you want to hold that ticket. So the longer out in time, the more expensive the premium, the more money that goes into the account as soon as you sell the put. But now you're on the hook for that long period of time. So if you indeed
want to buy it at 150, you don't care anyway, because you either get paid by the premium or you get your price.
So basically what you're saying is, I'm collecting money. Somebody's paying here for the privilege of owning Apple below 150. I've used 150 as an arbitrary number. Let me give you a real life example. Before the split, when Apple was down to 90, 92, way back then when it had a correction, and everybody, I knew a lot of good technicians that believed that it was going to 70, 75, and it was a matter of time. And I said, you guys are crazy. Okay, well, even if it goes here, I'll sell you this lottery ticket. And I sold puts in the 60s. Can you believe it? $60 Apple. I was like, the math doesn't allow it to go there. So I had strong belief, and I sold as many as I could. And I collected like $2 at the time for 60. So I'm sure you can find something here that fits your level of comfort of where you want to go along Apple. And if somebody's really believing in Apple, they can sell the put and buy a leap call. So they commit to.
Is that a risk reversal?
Yeah, that would be a strong statement saying that we are down at the bottom of things here for Apple, and I want to go along for free, basically, or for cheap. Buying the call gives some time limit. That's why I said leap. So way out in time.
Right.
So
you're
it's
you're financing that long-term option probably by selling more near-term puts and going further out to give the market time to work.
And you can also the fact that you commit to buying, you don't commit to buying Apple. You're basically buying a ticket that allows you to buy Apple at a certain price when you buy a call. So you're not forced to buy it. You just have the option to buy it. Whereas when you sell a put, you're committing. You're on the hook for as long as you own that put. Now, if price falls, you decide to change your mind, you can buy back that put to close the risk at a loss, because now if price falls and you're holding a short put, then that put price will increase in price, and you say, okay, you know what, I changed my mind, things look different, I got to buy it back. So that could happen as well. It all depends on your thesis. So have a thesis, execute the trade, and then just like anything else, you have to manage your risk.
Okay.
Coach, since you asked before,
go ahead.
$2.23 for 1 month expiration at 150 is the price you get.
So if you sell one put, that you
which is 100 stocks for those that don't know.
Right. It represents the commitment to buy 100 shares of that. So here's the big caveat on selling puts. It is I only do it when I am able and willing to buy that stock. Otherwise, that locks up your account, because unfortunately the platforms right now allow you to do it even though you don't have the money in your account. They'll give you slack to a certain degree. So then when the hits the fan, then suddenly you go, oh, wait a minute. Well, we don't want you to hold that. So you got to give us this kind of bucket of money right now in order to cover the margin call. So if somebody does not want to do that, then they can sell a put spread. So instead of $2, then you settle for 50 cents on a say $2.50 wide spread. Or $5 wide spread. Then you limit your losses. Even if it goes to zero, you have an finite amount of money you can lose, and that's it. And in return, you can yield 20%, or it depends on the spread that you sell.
Interesting. Now that Steve came on, it reminds me, I have a couple of Greek partners here, and I'm wondering if you pay attention to all the Greek in options trading. I didn't know Socrates was an option trader, but the beta, the theta, I'm sure there's alpha, all the Greek stuff. Is it important in your work in trade selection?
Well, here's the thing. When I teach an options class, I would commit to no Greek allowed, but you can't not discuss what they represent. So I can speak it in plain, simple English. Why is time important? and why is the delta important, and what's volatility, and how does it affect pricing. So you can't get around the matter of it, but you don't have to tell it in a way to where it intimidates everybody out of there. It is plain simple English, just like technical analysis. I'm not a technical analyst, but I can certainly play one on TV here and speak to what a head and shoulders is in plain simple English. So that's why it's more like Main Street versus Wall Street. I have nothing to do with Wall Street, and I realize that I'm not part of the gang, but it is plain simple English, and you can always explain it. Yes, they do matter. Volatility matters. That tells you if you want to sell, if you want to buy, where to do it. And some people establish trading. They say, okay, I only like to buy something that's a 25 delta because it has the best bang for the buck and things like that. So you have to know what it means, but you don't have to know the terms.
Okay. Interesting. So I see some of the other instruments. Obviously, there are no options in Bitcoin. Why are you following it?
Bitcoin is for friends of mine that actually they like to trade it. And my message in Bitcoin is that there are no experts. You keep hearing people talking about Bitcoin's got to do this, Bitcoin's got to do that. It's just another trading vehicle. And this is where I take cues from my chartist friends that actually don't really care what the heck the ticker is, as long as they can look at the chart. Exactly.
Yeah.
When it was ping ponging back in May, before May, I drew this little green line which said, okay, so technically speaking, if it loses the 6,000 ish. Ish is a very important technical term for me because no one can predict pennies. It has a trap door, and I drew this little stick down there. Okay, and I said, if it loses this, the trap door will open and the twos will come. It's a possibility, but there are some stopover places before that. So now I haven't visited in a few days. So
yeah, nice pop today. You still think where does that green line come to in the twos, the upper twos? Because I think it was 2,800 number.
Yeah, that number 2,800 was somewhere. So I switched to a weekly to eliminate the noise. I don't have the expertise to tell you how long the dip should be. Usually technicians will tell you it has to be the length of something. But I look left and I see where the action was before, and that's where it's going to repeat itself. So this candle is kind of important, and the low end of it is in the upper three, like 3,100. But this is the consolidated area right here. That should be support. But I don't know enough about the subject, and I don't think anybody else knows.
How about gold, Nick? I've traded gold options. They're pretty liquid, aren't they?
They are liquid. They are liquid, and it's been a tough trade though because gold is been at a disadvantage from a runaway dollar. So I did try to time it to benefit from the trade in gold, but it has been a tough slog this year. So I finally said, okay, you know what? I'm just going to sell put spreads in it and wait for time to die. So here it looked like it was going to do something good, and then it failed. So this is the GC futures contract. Right. So now, okay, the hope would be above here, it would run higher. But as long as it's doing this, that's good. And as long as the wedge doesn't break that way, it'll be good.
Okay, so you are a pretty good technician. Don't short sell yourself short. Okay, so with 2019 up ahead here, we're kind of wrapping up the year. Yeah. Where's your radar for credit spread opportunities? If you had your way and you were looking for things to set up, what would you be looking for into next year? Because it's kind of late to be doing anything for 2018 now, right?
Right. Everybody's waiting for the Santa Claus rally, although nothing would surprise me. So I'm trying to draw, markets repeat themselves, in my opinion. So this was the 2015 debacle on oil. We were ended the year, and then suddenly February, boom, everything off to the races. So here we have, I don't want to say oil problem, but more like a financial industrial problem, but it's all mostly artificially depressed by fears, sentiment. So we could have a snap rally like this one if we can alleviate one or two of these things. So we have the China tariffs, mainly tariffs in general, but China specifically, and then we have the fear of the Fed, and who knows what happens on the upside if you can unshackle these two things and change sentiment. I don't think the bears are out there, because if they were, they'd be pressing the short a lot harder than this, and we'd be lower earlier than this. So, but anyway, so I would go to respect the downside scenario and go to the edge of it, and I would sell a spread and see what happens. And to balance it, I would sell the opposite spread up top and do an iron condor. Now that you've heard the term.
I've heard it. Yeah, I don't know. I understand it, but I've heard it.
So I just drew two boxes. So if I sell a spread saying prices are not going here, this is plainly stated. When I sell a spread down here, I say, okay, the SPX is not going down here. And to balance my risk, I sell a spread up there saying it's not going there either. So I want price to do this for the next few months. Depends on how far out in time I do it. So I pick my time frames and I lay out my iron condor. So what happens is I collect twice as much premium, basically, and I lower my risk, my money risk. Now I can lose in a fall and in a rally. So, but I lower.
So what do you do, Nick, if the box is violated?
Mm-hmm.
Do you liquidate the whole trade, or do you roll, or how do you handle
At first, I have to decide if my thesis is still correct. If my thesis is broken and I believe there's more downside to go, then I'll just close my walk away from it. And if not, if I think it's just a matter of time, I just need more time to be correct, I'll basically rolling it, which is simply said is just closing it here and opening it lower and see if it survives next time. So it all depends on what your thesis is and if it's viable. That's one thing that is different. One big difference between professional traders and retail is they are not willing to, the retail most often is not willing to take the loss when they believe they're wrong. Instead, they move it, they roll it. And the biggest thing they do, if you remember anything from this, don't add contracts in order to, quote, make up the difference, because if you have
like scale in to bring down your average.
Well, no, if they have to roll and suddenly they're paying out of pocket to roll, they say, okay, well, instead of 10 contracts, they'll make it 15 in order for it to be a credit versus a debit out of their account. Well, what they in essence did, they had a problem, they made it bigger. So I don't do that. And when you do an iron condor, it reduces your money at risk, because now you can your maximum loss is smaller because you collect more premium, but you can only lose on one side or the other. So if your width of the spread is $5 and your maximum risk was $3 to start out, now it's suddenly $2, then there's less money at stake. But you can lose on both ends, but you can lose less money and your yield is a lot better.
Okay, so is your business model as a mentor, teacher of this stuff, or do you have a service where you put out recommendations? Let's get to your business model, Nick.
Sure.
How people could follow you and follow up if they want to learn a different way besides outright FX trading, a different way to skin a cat.
Sure. You can reach me at sellspreads@gmail. You can see I didn't prepare any overhead sell pitch or anything. sellspreads@gmail.com. And I answer all emails pretty quickly. You can follow me on Twitter or StockTwits. It's @RacerNick. And sorry about that. And the model I best prefer is teaching, empowering, and because this way, there's always something to learn from anybody. And I used to have a trade alert service. I found it frustrating because of whoever is trading. I even had an auto trade service for a while. And it was, I place the trade. It doesn't execute there. I do share a lot of trade setups with detail, most often with videos and definitely with write-ups. And I'm open to examining other trades that come my way. So the chat room is open all day. We spend a lot of time in there. I track the minute to minute, even though I don't trade it often minute to minute. I have future traders in there. I have credit spreaders. I have people who just like to buy stock and trade that way, traditional way. So
you have a community too. So what's the fee to get into your trading room?
I'm very flexible. The face value is 159, but that's for somebody that wants to learn options from start to finish. And the going rate, so to speak, is 75 a month.
Okay.
I have made big concessions for special cases, not for need or anything, for application. Like if somebody just wants to ping me once in a while, I'm not going to charge them 75 a month. That's insane. So it'll be a nominal fee for them to join the community. And some people are in there for free just for one reason or another. The more people, the better. The chat room is open all day. There's nobody nasty in there. I tightly control it for it to be no political discussions in there, because these days that's a pitfall. And a lot of ideas are flowing all day. Inevitably, somebody will jump in the middle of the day, watch this, it's moving because of this or that. We jump on it if we can. And somebody says, hey, how about J&J? Can we catch a falling knife? I'll give you my opinion, whether we can or we can't, and why. And so join me if you can. If you don't like it, you can get out. But it's definitely a fun place to be and a genuine place to be. So there is no ulterior motive here. And
is there do you have a website?
I do. It's sellspreads.com. And there, they can sign up. But really the best way is to send me an email. Tell me what you're doing right now. I'll hit you back with how I can help, if I can help, and if there's a good fit there or not. Most people that join, they stay for the long term. It's even cheaper for them. And it's not about the value, the face value of whatever it costs you to get in. It doesn't represent the value of the content. I provide 2 write-ups a day, whatever intraday alerts that might come up, and definitely the chat room open all day. So there's never a dull moment.
Well, I appreciate you coming in today, Nick, and may everything expire worthless for you the rest of the year and into 2019. And go ahead.
May I sell the most losing lottery tickets out there.
Yeah, may everything that you do, because of what you do, expire worthless. And appreciate that you came in. It was nice meeting you, and it's a very interesting way to trade. It's, people complain about, the algos and the black boxes. Well, this is one way you can make yourself an insider, is by taking the side that most pros do. And, I've noticed, I did my share of buying, what a coincidence it is, how many times that they could pin the market so they could collect both the call and the put premium on the strike. So, really appreciate Nick. I learned a few things from you today, and thank you again for coming in.
Thank you for the opportunity. I appreciate it.
All right, buddy.
All right,
good hunting. Yep. Good hunting. And that's it for us, everyone. Now, remember, whether you're outright position trading, scalping, or selling options, don't just count your pips, count your blessings. See everyone for Turnaround Tuesday tomorrow. Adios. See you in member chat.